Hello everyone and welcome to our brand new journey into the world of IFRS 18, presentation and disclosure in financial statements. In today's session, my friends, we will be covering the following areas. Number 1, the objective of IFRS 18, that is why does this standard even exist? What's its purpose? And number 2, the scope of IFRS 18, that is when do we apply it and when do we not. By the end of this lecture, you will have a crystal clear understanding of what IFRS 18 is trying to achieve and who needs to follow it. My friends, IFRS 18 is one of those standards that quietly sits in the background but does all the heavy lifting when it comes to how your financial statements look, feel, and speak. Yes, you heard that right. How they speak. IFRS 18 is like the language coach of your financial statements. It ensures that your financials not only contain accurate numbers, but those numbers actually make sense to the people reading them. Let's start with the objective of IFRS 18. This standard has one clear mission, that is to set out the requirement for the presentation and disclosure of information in the general purpose financial statements. The purpose here is to provide information that is relevant and faithfully represents the company's assets, liabilities, equity, income, and expenses. In simple words, IFRS 18 is like that strict but fair editor who makes sure your financial story is not just correct but also easy to read and meaningful. Let me put it another way. Imagine you are preparing financial statement for a company. You have done the accounting, closed the books, finalized the numbers. But what's next? Well, now you need to present those numbers in a way that makes sense to your audience, that is investors, creditors, regulators, or anyone interested in your business. What's the point of having all the right numbers if the users cannot understand and interpret them, right? So my friends, IFRS 18 ensures that your financial statements tell a consistent story, focus on what's matter, and avoid becoming a jigsaw puzzle for the stakeholders trying to figure out what's going on. Are we clear on that? Great. Let's pause here for a second because we just used a fancy term, general purpose financial statements. Now what are these? My friends, these are the standard full set financial statements prepared annually by the companies that present information about asset, liabilities, equity, income, and expenses and are intended for users who don't have access to internal information. So the people using these statements need to make big decisions whether to invest, lend money, or provide resources based on what's in front of them. No behind the scene WhatsApp chat with the CFO, no late night Excel files, just these statements. That's why IFRS 18 is important. It ensures these statements speak clearly. Okay, now let's talk about the scope of IFRS 18. That is, when do we apply this standard? IFRS 18 applies to all entities that prepare their financial statements in accordance with IFRS accounting standard. Yes, whether you are a profit-making company or a not-for-profit organization, if you follow IFRS, you have to follow IFRS 18. But wait, before you go around and applying IFRS 18 to every corner of your financial statements, let me give you some exception. First, statement of cash flows. My friend, IFRS 18 does mention the cash flow statements, but the detailed rules for the cash flow statements are given in IS 7. So if you are working on the cash flow statement, you have to knock the IS 7 door. But IFRS 18 still applies the general rules to the cash flow statements. So don't ignore it completely. Treat it like a strict headmaster who occasionally drops into the other classrooms. And the second exception is condensed interim financial statements. When you are preparing interim reports like quarterly financials, you need to follow IAS 34 interim financial reporting. Again, IFRS 18 steps in with some general guideline, but the specifics are handled by IAS 34. So you can think of IFRS 18 as a parent who supervises but does not micromanage every little detail in these special cases. My friends, let me take a quick diversion at this point to clarify something important. IFRS 18 uses terminologies for profit-oriented entities. So if you are dealing with a not-for-profit organization, then you might need to tweak the descriptions and labels in your financial statements. For example, if the entity do not have equity as per IAS 32, as in case of mutual funds, then you will need to adjust your presentation accordingly and use the labels like members' interest or unit holders' interest. Similarly, in case of entities like cooperative society, whose share capital is technically not equity, don't worry about it. Just present it in a way that reflects the reality but still follows the IFRS 18 principle. Remember, the spirit of IFRS 18 is clarity and relevance. So as long as you deliver that, you are in a good shape. Alright my friends, let's wrap it up with a nice little recap. The objective of IFRS 18 is to make sure your financial statements tell the full story, clearly, faithfully, and in a way that makes sense to the users. IFRS 18 applies to all entities using IFRS standard, with some exceptions like cash flow statements and interim financial reporting. General purpose financial statements are for external users who rely on your report to make big decisions like investing, lending, or just even trusting the company. If your entity structure is a little different, IFRS 18 says no problem. Just adjust the presentation while keeping the core principle intact. So my friends, that was the kickoff lecture for IFRS 18. I know that's not too scary, but we are just getting warm up. In the next lecture, we will dive deeper into how to structure the financial statements. What are the key line items, what are the totals, subtotals, reclassifications, and many more. You will soon start appreciating how powerful a well-presented financial statements can be. Until then, stay sharp, stay curious, and keep learning. Thank you.